I'm Brian Ord, Western Region President of Wilmington Trust. I will be the host for today's great inaugural live event entitled Venmo Me Your Taxes, keeping your fingers on the pulse of Washington, D.C.'s tax law changes and latest developments. This is presented by Clary and Turney.
Thank you, Brian, and welcome everyone to our virtual Hawaii Tax Institute presentation on Venmo Me Your Taxes, which is really kind of a fancy and cool and interesting way of saying cutting-edge tax and estate planning developments that Turney and I are going to summarize here today. So off we go. Beginning with the first topic that we want to address would be trends in the Section 7520 rate. Now, you all will recall that Section 7520 was introduced into the Internal Revenue Code back in the late 1980s, and Section 7520, along with Section 1274 and the applicable federal rate, all have a great deal to do with the success or sometimes, unfortunately, the failure of certain kinds of estate planning techniques that we refer to as leveraged transactions.
My younger lawyers, as it gets up into the ones and they start thinking about it being two, they sort of say, how can we accommodate these high rates? It is a very interesting thing that when you look at numbers for GRATs, for private annuities, for that type of thing, that 1.4 is more than double 0.6, and there are a lot of things that you could do with the even super low that are harder at 1.4, but as they get higher, if they do get higher, you'll go back and you'll remember that there are just a lot of things that don't work.